Hello, everyone. I am Balram Dwal, working as an assistant professor at Tribhuvan University, Nepal. I am here to discuss under title Over Indebtedness in Microfinance, a Case of Nepal. The microfinance industry is torn in an ongoing debate about the risks of mission drift. As we all know that microfinance is originated with specific objective of social mission with financial services. With increasing concerns about negative effects of microfinance at a time where trust in the positive impact of microfinance is weakening. One of the most pressing challenges facing the microfinance industry today is the risk of over indebting borrowers. In this context, over indebtedness is currently one of the most serious risks of microfinance, endangering both social impact and industry stability. It has the potential to push customers further into poverty, accompanied by the material, psychological, and sociological consequences of debt. The microfinance industry has only recently become aware of the risks of over indebtedness and still suffers from a significant research gap. Thus, I am discussing the issue of over indebtedness in microfinance in the context of Nepal. It's my immense pleasure to share my conceptual paper among you. I'm organizing presentations in this structure. First, I will briefly introduce my background of the study. It includes information about the history and relevance of the topic, as well as any key developments that led to the study. Then, enter into the current issues regarding the over indebtedness of microfinance borrowers, which I have incorporated in the statement of the problem section. Similarly, I will present the study objectives, which is followed by methodology. The major part of this study is a review of past studies on over indebtedness in microfinance institutions or programs on the basis of theoretical review and empirical review. The author develop a proposed research framework. With this, I will end my presentation. Microfinance has brought significant changes in the global financial market by bringing traditionally unbankable persons into formal financial services and making them bankable, not only in Nepal but also globally. Microfinances emerged as a means to address this gap by providing small loans, savings, and other financial products to empower the economically marginalized. However, in recent years, concerns have been raised about mission drift in the industry, where lenders are shifting their focus from solving the poorest and most vulnerable communities to more profitable and less risky markets. The alleged excess of microfinance institutions against their borrowers have been making the headlines in Delhi newspapers in Nepal. The pictures depicts the news headlines about protests against microfinance institutions and microfinance institutions forcefully debt recovery practice. Here is also some cartoons which depicts the problems within the borrowers of microfinance institutions. When we see the dark side of financial system and markets, we encounter the few questions like why do formal financial institutions such as banks restrict their offers to credit to poor people? Why do banks restrict credit offers to poor people even when they do not lack capital? The researcher Marconato, Kroz, Mauna, and Texera addressed these questions in their review article. They identified the factors of high cost and risks of financing poor people. The factors are as follows. Lending to poor people require a higher cost per borrower due to high geographic dispersions and difficult to reach. Poor individuals often lack access to formal educations and technologies, used for obtaining information, communication, and managing business activities. They have a high degree of social detachment compared to more tightly knit communities. Poor individuals have a higher vulnerability to various types of external risks such as disease outbreaks, weather and climate changes, and minor economic and social changes. Microfinance institutions exist to address the economic risks associated with lending to individuals excluded from formal credit markets. By utilizing lending groups as a mechanism to enhance information symmetry and enforcement activities, microfinance institutions can provide assessed credit for individuals who may not have sufficient collateral or credit history, thereby promoting financial inclusion also. Microfinance institutions through lending groups can enhance information symmetry and enforcement activities, mitigating these risks. Lending groups in microfinance provide a mechanism for sharing information and monitoring borrowers, reducing information asymmetry between lenders and borrowers by pooling resources and collectively guaranteeing each other's loans. Lending groups create a social collateral that substitutes for traditional collateral requirements. This allows microfinance institutions to extend credit to individuals who may not have sufficient collateral or credit history to access formal credit markets. Let's move on scenario of Nepal's microfinance industry. As of mid-January 2023, 64 microfinance institutions reported reaching over 6 million clients or members. Among them, nearly 53% are borrowers. Microfinance services have expanded to all 77 districts of Nepal by 63 microfinance institutions with 5,093 branches, 444,000 centers, 23,000 working staffs, and 1.4 million groups formed by microfinance as per Central Bank of Nepal. The Nepal Rashtra Bank estimates that the repayment problems mostly relate to around 1 lakh borrowers in Nepal these days. While we see the definition of over indebtedness, we find different kind of definitions from different dimensions. We can find the definition of over indebtedness. In this paper, the author has used the severity dimension of over indebtedness by as explained by Skiggs 2010. According to Skiggs, a microfinance customer is over indebted if he is continuously struggling to meet repayment deadlines and repeatedly has to make unduly high sacrifices to meet his loan obligation. The institution involved in providing microcredit started with a genuine objective of helping the poor and low income people improve their economic and social prospects. However, over time, these institutions started drifting from their social objective and become more closely linked to the mainstream finance. The focus shifted towards organizational goal of higher profitability, higher repayment rates, and so on. The commercializations and profit-driven motive allowed the microfinance institution to mobilize huge funds from mainstream financial institutions as well as the public by using the financial markets. But it also resulted in aggressive and undesirable practices in the market to ensure high repayment rates, according to Cylindra 2006. The problem of over indebtedness was also evident from researchers concluded in various countries like Bolivia, Ghana, Cambodia, India, and so on. Recently, a group of victims of the microfinance institutions is organizing protest against the alleged excess of the microfinance institution by forming a struggle committee. The protesters have accused the institutions of charging exorbitant interest rates, high service charges, and for misbehaving with their staffs. Therefore, understanding the causes, consequences, and potential solutions to over indebtedness in the context of Nepal's microfinance is of utmost importance. Thus, this study aims to identify the causes and underlying factors contributing to over indebtedness in Nepal's context. The study will be concluded with proposing the research framework on over indebtedness in microfinance for further research. This work with theoretical and empirical contributions from economics, psychology, and sociology and unites microfinance specific findings literature. Initially, keywords like over-indebtedness in microfinance has been searched in the Google Scholar. After filtering and downloading the previous work, they all are managed in Litmaps website. Litmaps are visual citation maps that helps researchers to understand how research connects. It helps to manage and connect between the literatures. Simultaneously, reference management software Mendeley is also used to get update on this research area. Initially, the Tabor and Bors 1977 had identified the problem of debt among microfinance borrowers. In 1981, Stiglitz and Weiss explained credit rationing in markets with imperfect information. These two research work can be considered as the preliminary research work which focuses on the problem of debt repayment. Lascelles, Mendelssohn, and Rosas explored from supply side's cause of over-indebtedness in 2040. They have indicated lack of professionalism among the microfinance institutions, their inability to evaluate clients' credit worthiness and manage arrears and recovery practices. It also indicates poor risk management system of the microfinance institutions and their unwanted emphasis on competition, growth, and profit at the expense of the social objectives. Researchers such as Vogel Geksang, Bhatta, Durban, Brehanu, Empogole, Noai, Khankar, Skiggs, Ravichandran, Chichai Belu, Sawada, Awais, Mohammed focus on the multiple borrowing and its effects on over indebtedness. The problem of over-indebtedness was also evident from research conducted in various countries like Bolivia, Ghana, Cambodia, Bangladesh, and India. Some studies indicate that mul- multiple indebtedness has a positive effect on loan repayment and microfinance institutions' sustainability, while others shows that it leads to over-indebtedness and consequently non-compliance with the loan. The few studies like Guerin, Roses, Subramanian, and Kumar in 2011, Jine, Krishnaswamy, and Pons in 2011, likewise Sarangi 2011, Puliakot and Pradhan in 2015, and Korla in 2015 have focused on over indebtedness but are but they are region specific. Rare literature on this topic is found in context of Nepal, except Lamechane 2022 and Chaulagai 2022. The conclusion of these overall studies can be presented in the following way. From the empirical review, this study identifies six different factors which contribute to over indebtedness in microfinance borrowers. Most of the researchers found borrower's behavior is major contributing factor, whereas lender behavior is also major responsible. factors. It is found that microfinance institution itself performance lead the borrowers into over-indebtedness. External factors can turn a perfectly manageable repayment situation into an impossible one. Poor people often experience sudden reduction in income, unexpected expenses. Thus, this study indicates that over-indebtedness among microfinance borrowers exist due to the major four areas such as supplier side, demand side, regulatory, and external side. Details of influencing factors are as follows. Supplier side, that is microfinance institutions, multiple borrowing, extensive lending, growing competition, low performance, weak corporate governance, weak monitoring and supervision mechanism, excessive marketing and growth focus, unstable product characteristics, conductive lending procedures, and poor risk management system are major factors under supplier side domain. Likewise, cognitive and psychological biases, sociological influences, socio-demographic characteristics, economic characteristics, financial literacy, use of loan are identified as crucial factors under demand side, that is borrowers. Weak supervision and regulation, lack of microfinance policy and guidance, absence of central credit bureau, institutional and legal environment are found as influencing factor from regulatory side. Finally, under external factors, adverse shocks, information asymmetries, and natural disaster are major contributing factors for over indebtedness in microfinance borrowers. Thus, using these four factors such as supplier side, demand side, external side, and regulatory side, further empirical study can be carried out. Thanks for your patience.